There's a conversation to be had.
Oh, that's hot. That's hot.
For another Conversations to Be Had podcast. It's me, Rashawn. I got my guy Charlo over there, but I also have a very special guest. I got my good friend, mentor, Dr. Odili with me. Now, I know that you're a pretty humble guy, but I gotta give you your flowers, so I wrote something out here.
Okay.
For you, okay? So just want to tell you all a little bit about my guest. He's not only a highly respected physician, but also someone who's very close to me. He's a friend, mentor, and brother, just as I said. Dr. Odili is a board-certified physician who's been serving patients in emergency rooms and urgent care clinics across Houston and Central Texas since 2009. He's been recognized as Physician of the Year by both MedSpring Urgent Care and Houstonia Magazine, and currently serves as medical director at Apex Urgent Care. But beyond medicine, my good friend Dr. Odili is a published author. He's a community advocate, and his works include books on teen vaping, COVID-19 pandemic, and the Organic Seeds of Greatness series, empowering both youth and adults through knowledge, entrepreneurship, and financial literacy. So I know it's a little long-winded, but I'm proud to have you as a friend.
I'm honored.
Yeah, so I had to give you your flowers there, man.
Appreciate it.
Thanks for coming in, Doc.
No, thank you guys for coming out. And not telling you these guys are in Houston, Texas, right?
Yes.
Houston. Sitting in the background.
Flew all the way out to Houston, man. It's hot, but it's beautiful out here. Definitely beautiful out here. So today, what we're going to be talking about is basically crypto basics. It's something that you kind of put me onto. Before I met you, had me. So what I used to do is I would read his books and kind of like, what do you want to call it, edit?
Yeah, you're my editor.
Okay. I didn't want to. I used to edit his books. So he gave me a book one day. It was called Black Wall Street, Cryptocurrency. And I did my editing like I usually do. But I also learned a ton because I knew nothing about cryptocurrency. So today what we want to kind of do is, talk about the book and about ways that, people could who are maybe a little apprehensive jumping into the cryptocurrency, give us some little tips and ideas. And, to me, I found it to be fun. I did make some money, but I do want to put this out here. It's a disclaimer. So let me just say this real quick for legal reasons. The content of this podcast is for informational and educational purposes only. We're not financial advisors, investment professionals, or fiduciaries. Nothing you hear on the show should be taken as personal financial advice. Always do your own research and consult with a licensed financial advisor before making any investment decisions. Cryptocurrency, other investments carry risks. You invest at your own discretion and responsibility. We got that out the way now.
Yeah,
all right.
Turn the disclaimer to us a little
Look,
bit.
but I'm saying, hey, I'm just covering ourselves here, okay?
Yeah, you got to protect
Check this
yourself.
out. This ain't financial investment, legal, or tax advice. Always do your own research. There you go.
You should have let me lead.
Yeah.
So anyway, man, I don't know. So one of the things I kind of wanted to start on is, in your book you talk about how the banking system is kind of flawed in a way. That, the return on investment is very minimal at best. But one of the most interesting points that you make was about how they take our money, borrow our money, and they can make a high risk decision and profit. We don't see $1 of that money. But let's say they make that same high risk and fail. They don't have anything to worry about because they got the FDIC to bail them out. Right. It's pretty unfair to me.
Right. The system is definitely rigged in their favor.
Right.
So banks aren't there for us. Banks are there for themselves.
Mm-hmm.
The bankers, like you said, they design bank accounts so that they pay you a little bit of interest for holding your money there, or no interest at all. If you got a checking account, you're not getting any interest on that money. But they're using that money to make their own investments. They're loaning that money out and getting a nice percentage of interest rate on that, or they invest the money into other things. So having a good understanding of the way money actually works is key to starting to learn how to make your money work better for you.
Yeah, and so in a way, would you say that like cryptocurrency is kind of a way to have more? I can't think of the words I'm trying to say, but have more of a be more of a factor with your own money, like have more decision making with your money. Would you say that?
Because when it came out, it was a level playing field. The guys that rigged the traditional banking system and the monetary system around the world didn't really understand cryptocurrency. So it was definitely a place where you had your own autonomy. When crypto was first envisioned, 15 years ago, it was envisioned as a system breaker. They envisioned a way where people could pay each other for services and cut the banks out of the financial system. So there's a lot of peer-to-peer, person-to-person transactions that still go on with cryptocurrency. You can buy goods without disclosing your address or having to put your driver's license or credit card. You don't have to put any banking or financial institution. It's essentially like cash without having to go through the trouble of traveling somewhere and actually paying somebody in cash.
Do you think that is being met now, or do you think it's changed?
A lot's changed. So once government started getting involved, it sort of corrupted the system.
Okay.
So when you start having entities that are too big to fail investing in something, then you lose the free market status that cryptocurrency once had. It truly was a wild, wild west where you really couldn't predict what was going to happen unless you were a seasoned investor and you were more attuned to the ebbs and flows of bull and bear market.
Mm-hmm.
Now with a lot less volatility in Bitcoin, you're not going to see Bitcoin go back down to 75,000 like it was last year. There's way too much big money in Bitcoin. There's going to be more volatility in the smaller coins, but because everything still rides the wave of Bitcoin, you're just seeing a lot more stability in the market, and that's by design. Goldman Sachs and JP Morgan and Fidelity, all the big companies that started doing the Bitcoin ETFs, specifically want more stability so that they can sell the ETFs to other people. So regardless of the value, a broker makes money on every transaction.
Okay.
So these people that are trying to get you to buy and sell these things don't care about the price, and they don't care if you profit. Because they make money on every transaction.
So you mean like the Coinbases, those type of
every banking institution
that's
dealing in Bitcoin ETFs, Ameritrade, like I said, everyone that does IRAs of any kind, ETFs, they're making the money on the transactions.
So they don't care how the market is. It doesn't matter as long as you're trading.
They make money in the bull market. They make money in the bear market because they make money every time a move is made.
That's what.
Well, but Jacory wants to know, isn't crypto just hype, not real back? There's nothing really behind the crypto, like no monetary back.
So real quick, our friend Jacory wants to know, is crypto just all hype?
Yes.
And there's no backing behind it. So is he asking if it's fiat currency? Because there's no. Well, I mean, I'll let you answer that. But I mean, to me, I really don't see a huge difference between the fiat currency and crypto anymore because there's nothing backing the dollar either. Would that be an accurate statement, you think?
Yeah, the days of gold bullion back in the U.S. dollar, died 100 years ago. So whether it's the U.S. dollar that people, have faith in, or it's the Mexican peso, or it's cryptocurrency, as long as there's someone on the other end willing to accept that currency is good.
Okay.
So if you're asking if it's all hype because it's not backed by something solid, the U.S. dollar isn't backed by anything solid either. It's only backed by the full faith and credit of the U.S. government. So if a person loses faith in the government, the country they live in, that money has no value.
Okay. Good question, though. That was a good question, and I appreciate it. So you mentioned...
Let me go a little bit further.
Go ahead,
when people talk about hype, they need to have a better understanding of the way money works. The U.S. dollars in your wallet, in your bank account, they're only going down. Inflation reduces the value of that money every year. So if you have the option of having money that only goes down or having money that can go up and down, how are you going to make the play? We all know money from 10 years ago doesn't buy what it does today.
Yeah.
Money from 50 years ago doesn't buy what it does today because inflation is causing the U.S. dollar to steadily decline. Now, cryptocurrency offers the opportunity to invest in something that can rise. All money can fall. We know that. Even real estate. You want to buy the house at a good price. You want to sell it at a better price. Same with cryptocurrency. But that US dollar you're holding on to, that you're comparing crypto to, it's only going down. You're never going to get that same money back.
You know, and I mean, maybe this is a little bit off subject, but one of the things that I do like about cryptocurrency is the fact that you have the volatility, you have the up and down, you know. And lots of times I find that I can make myself a little bit of money during those periods. But I want to say that it's very careful and strategic though when you do it. But it's one of the things I do like about the market. I mean, the fact that it does do that up and down.
I mean, that's the key to investing. Investing means putting your money into something that's going to grow.
Right.
Your bank account, the money there is only going to deflate. It's going to reduce in value because of inflation. But people invest in real estate. They invest in businesses. They invest in gold. They invest in stocks because these things all offer the opportunity to rise. And that's what people who are making money are doing. They're investing in things with the opportunity to rise.
Right. Okay. Go ahead.
Political Bear Nation, Boy V says, isn't there a way where we can find a happy marriage between Wild Wild West with crypto and some regulation to reduce fraud and volatility?
So regulation, in my opinion, is not going to reduce fraud. So there's scammers everywhere. So fraud is going to take place whenever there's opportunity. So where opportunity meets lack of education, that's where the scammers jump in and take advantage of people. So if you're looking for a happy medium, it's not to reduce fraud. And regulation is not going to do it either. Now, there's different types of regulation. If you're looking for stability, then there's some regulation that can control how wild things can be. That may be helpful, but it may make things a little bit boring. But the real issue with regulation is that it's always written in a way to favor one group over another. So when you're asking for regulation, you're asking in an idealistic way. But the real regulation that we get is written by people who are already profiting off of the stock market and everything else in an unshared and uneven way. So the same people that we don't trust to run the government fairly, the same people we don't trust to do insider trading, because that's all they're doing, insider trading.
Right.
We can't trust these people to write regulations for crypto. They're just going to find a way to do more insider trading. So it was more fair in the old days when the government wasn't involved, because there really wasn't a lot of big powers that could control the market. It was a lot more free. The more big companies and the more government gets involved, the more it's just going to mirror the stock market. And you already know that if you don't have inside information in the stock market, you're not really going to make much money.
And that's one of the things I liked about crypto, because it didn't always follow the stock market, you know. So what do you think about all the things that are happening lately, like recently with, this new administration?
Well, before you get into
the
crash of the crypto, Nancy wants to know, for somebody brand new to crypto, how would you describe in simplest terms what it is she's having trouble wrapping her head around? That was the question.
Sure.
She wants a regular man's term on what kind of crypto.
Yeah, definitely. And definitely. So a lot of the books I've written explain complicated issues like that in layman's terms. So if you're asking what cryptocurrency is in a really basic sort of sense, I would call it a form of digital currency that's not tied to any one particular government or institution for that matter. So it's digital money that's not tied to any particular government or institution. Mm-hmm. So even in the video games, in the Fortnite, they got Fortnite bucks. And Roblox, they got Robux.
Yeah.
You shop at right. You shop at Kohl's, they got Kohl's Cash.
Uh-huh.
So every company, every entity has its own little type of inside currency that it uses. They do that so that they can take more money away from you. And so they're getting U.S. currency, and they're giving you currency that's worth less than the U.S. currency. Cryptocurrency is another form of digital currency, but it's not tied to any one company or any government. So you have a bit more freedom with how you use it.
Okay.
That was good.
No, that was good, man. And hopefully that answers the question. I was reading back in your book and stuff like that, and so like I understand too. If this is what you were trying to ask too, Nancy, is like Bitcoin is just a complex algorithm, right? That's being done by a bunch of computers, right? And these computers are basically doing this algorithm to find the proof. Am I thinking of this right? And when they find that proof, that's when they mine the Bitcoin. Is that?
So what you're describing is the way the transactions are verified.
Okay.
So the security behind the use of cryptocurrency is in the blockchain. And the blockchain is an online ledger, or it's an online bookkeeping system.
Mm-hmm.
And that bookkeeping system is multi-chain, multi-platform, which means it's open source and anybody can see any transaction. So even though people can see every transaction, the addresses are not U.S. postal addresses or bank account addresses. They're digital addresses.
Mm-hmm.
So to verify transactions in a complex manner requires a lot of computing power. And the miners, and I'm not sure why they're called miners, that's a little bit of lingo from the old days, but they're really just bookkeepers, and they're verifying transactions. So they use their computing power to crunch the numbers and verify a transaction. Whoever computer is the one that does the verification does get a reward for that. So essentially they're being paid not much different than how the bankers at Chase and Wells Fargo get paid.
Okay.
You process a transaction, you get a little payment fee, just like a broker. The difference is it's sort of open market. You can't pick your broker in cryptocurrency. It's all open source. Everyone's participating.
That makes sense. So miners aren't actually mining Bitcoin. They're just actually confirming the transactions that are made within the.
Because see, me and Rashawn was talking about that last night, and I was saying, like, if it's 20, what?
It's like 21 million Bitcoin, something like that.
It was worth like 107,000. I was like, that's what's $2 trillion, $3 trillion, or whatever. Like, that's the set amount, though. Like, you can't go over that. Like, you can't go over that 21 million coins or whatever. So what happens when, like, if you're mining and you're not actually paying for it, you mine it and then you get, like, I thought mining was where they kind of tap into that algorithm and it chips off and then they end up with a coin after, like, I'm not no expert. I'm just saying, I know I see all the big computers and I'm like, what is he doing? He's mining Bitcoin and like, what does he get, a Bitcoin for it?
Yeah, it's just slang.
And so, yeah, it's kind of misleading because the way you explained it to me now is there's bookkeepers.
Right.
Right.
It's
so
just verifying transactions.
Verifying the actual transaction. So they're not actually creating another Bitcoin. It's not a new Bitcoin being created. But that's what I thought.
Yeah, that's what
I thought too. Right.
If you go chop down that 21 million, just out of the blue running a computer and making coins. So like that's that was the question.
Okay.
Yeah. So the fee that they're paid comes from the fees that we pay with transactions.
So, oh, really?
Yeah.
Right. So every time you make a transaction with Bitcoin, there's a fee.
No, yeah.
There's a very small percentage that gets paid out as a fee. That fee goes to the miners.
Oh.
That it goes to the bookkeepers.
Okay.
It's not unlike the credit card. So everyone knows if you pay with a credit card or you accept a credit card payment, the credit card company takes a 2 or 3% fee off that transaction. The Bitcoin fee is more like 0.3%. It's a much smaller transaction fee.
Okay. So, yeah, is there another question?
Yeah.
Go ahead.
He says when Bitcoin first came out with the non-existent fees, that was the best feature. But now it seems like it's only an investment like stocks. It's actually being used as currency. I can change it.
Well, again, once the billionaires get involved, it's really hard to change anything.
Yeah, it is.
So the good days are gone, unfortunately.
That's what
Bitcoin is.
I've seen all the banks and stuff buying. I mean, every company's buying. I'm like, oh, it's over for a little man. It's over.
But is there still life in the altcoins, you think? I mean, we're just speaking of Bitcoin now. What about the altcoins? And just so everybody knows, altcoins are all other coins but Bitcoin.
Right.
So they're called altcoins, just so everybody knows.
So when we talk about altcoins, like Rashawn said, it's all the other crypto coins like Ethereum, Solana, Litecoin, Doge, etc. There's going to be a lot more volatility, a lot more opportunity to gain with these, but there's a lot more risk of manipulation.
Okay.
So when you have guys like Elon Musk tweeting about a particular coin, or you have
on purpose to drive it up.
Right.
Saturday Night Live. Remember that Saturday Night Live?
Yeah,
Yeah.
I remember that. Dogecoin hit its all-time high that night.
Right.
Hasn't
Nobody's
touched
ever
it
seen a
since.
number like that since.
Ever since, man.
Yeah.
Kind of abrupt. We'll talk about that later.
Yep, and we have Trump and his kids
Mm-hmm.
opening up their own crypto exchange. They specifically pushed the White House to open up a crypto reserve and named the 5 coins that they were going to put in the reserve. Right after they made that press conference, the value of those 5 that they named increased by 25 to 30%.
Yep.
So the more you have these big players manipulating information, the less you're going to have any type of situation where you're going to have opportunities for the little guy. They're still out there, but again, you're going to have to increase your education to be able to rise to the occasion for these opportunities to make profit. If there's a knowledge gap between knowledge and opportunity, that's where the scammers come in, and that's how people are really getting robbed.
So education is really the key.
You know. Go ahead.
Nancy says, so does it go up and down like stocks? How does it value?
Sure. So when we talk about stocks, normally the value goes up when good news happens. So when a company reports their profits are going up, then you'll see the stock value go up. And if the company has a scandal or doesn't sell its product, then you'll see the value go down. So if we look at NVIDIA, when there was a lot of hype about NVIDIA, people were very motivated about it, the value went up. And then when we heard about DeepSeek and the new AI coming out of China, people got less enthusiastic about NVIDIA, and the price went down. With cryptocurrency, each token is like its own company. So when you look at, let's look at Cardano. Cardano was founded by Charles Hoskinson. He's one of the co-founders of Ethereum. His idea for Cardano was to create digital currency that could be used for third world companies that didn't have stable banking systems. So he's been working over the past 5-10 years to build up that infrastructure so that people can bank with their mobile phones using Cardano. When they do well with that project, the value goes up. When there's setbacks with bringing that plan to fruition, the value goes down. And you can look at each token like that. Some of the tokens are real companies, real vision, real founders, and real purpose. And some of them are just gags and jokes, like Trump Coin and like Doge. They don't really have a plan for the future or any idea for what they want the token to do. It's just something that they made to help move money around. And being able to tell the difference between the two is one of the first lessons you have to get down.
And that's actually one of the first lessons you taught me was to, when I look at the coin, find out what its purpose is, or if it even has a purpose. Because like you said, there's so many coins out there nowadays where they're just joke coins. They're basically board monkey NFTs. That's all they are. And
That's why I picked Ethereum. Like that was my And I got a question here for Jacory.
Okay.
Which is kind of like in line with the way I was thinking when I first got into it. He says, is it even worth it to buy Bitcoin if I can't buy a whole coin? Like $50 in Bitcoin is worthless, right?
There's people that can't buy a whole house, so they rent part of a house. Some people, obviously, you can't buy a whole building, so you rent office space or you buy a part of a building, you buy a condo. Not having the whole thing doesn't mean it's not worth buying. So I would put that out of your mind. The goal is not to have a Bitcoin. The goal is to make your money grow.
Yeah, I can kind of explain because I'm in his headspace where he was at because that's what I was thinking about. But you have to look at it like this, Corey. Like if you put $50 in it and Bitcoin goes up, let's say 110%, you're getting 110% on the $50 that you put in. So it doesn't matter what amount you put in, you're going to get whatever Bitcoin goes up, you're getting that percentage on your money. I mean, it may not be a lot because you only put $50, but it's still the same percentage as everybody else because that's what the increase in Bitcoin was, 110%.
Now, if you put that $50 in your banking account, it's going to be right at 50.
Yeah.
You might get a penny.
Right.
So you get a little safety, but there's no upside.
What is banking rates now? Like 3.03% or something crazy, or something real low. I know that.
Yeah, Ally is putting 3.5% on its savings account
Yeah, I was
right
thinking
now.
it was 2.5.
Is it 2.5? Okay.
Depends on the bank.
Right. Okay. I was gonna say you brought up a good thing. I know a wise man once said, "In this world we live in, knowledge is power. Enlightenment illuminates the unknown. Wisdom casts away ignorance. Information opens doors to new opportunities." You know who said that?
I know.
You know who said that?
Yeah, that's a quote from one of my books. Definitely.
Yes. And that's exactly what you had just kind of highlighted just a minute ago. You know, you got to go out, you got to research these coins. It's not like you're going to go there and you're going to find a coin all of a sudden it's just going to explode. That doesn't happen anymore. There's no unicorns or anything like that. Yeah. So you definitely want to do the research. That's one thing that I definitely want everybody to take away from this is research. Understand Knowledge is power. And within that, you could potentially, see some profit on your investments when it comes to Bitcoin or cryptocurrencies. So yeah, another question.
What kind of got you into crypto? Because I know that you got a lot of things. Author, obviously a physician, so you got a lot of stuff going on. What particularly drew you to the crypto?
So
the opportunity, or
right, it being new, Bitcoin's been buzzing around for over 10 years, and I was never really able to get into it when I wanted to, when I first heard about it. So for me, it was really about getting that opportunity. The only way to get the opportunity is to get the education. So I hired Michelle Lilly, who has a master's in blockchain and cryptocurrency.
That's co-author of your book.
Yep, and then we teamed up after that. So what she taught me in that short amount of time revolutionized the way I thought about currency and about finances. And that was something that I felt that people in general needed to know. That what we've been told growing up about trusting the bank and putting our money in it is the exact opposite of what the people in charge of the banks are actually doing to continue to make money off their money. So being a math major in college and just really wanting to see my money grow is what propelled me to learn more about cryptocurrency.
Like for me, it was actually my nephew.
Yeah.
My nephew Aaron. He came, he didn't go all into it, but he just, was mentioning, the young people hear about stuff.
Yeah.
So I just took the time to even get more deeper into it and investigate it. And I think when I finally was ready to make the move, I want to say it was like $800 or something.
Remember those days? Remember those
So
days?
look, I'm scared, right? I'm scared, so I'm sitting there like I'm gonna put 200 in. Hope for the best. I don't want the whole coin. I called my brother-in-law, Mickey, and I said, "Hey man, if you got a couple bucks, man, put it in this Ethereum, man." And I think it might work because I said it seems to be like the chain. It like makes it's a complement to Bitcoin. Mm-hmm. I said, but it's cheaper. So that was my way. Like I could probably get more bang for my buck in Ethereum than I would to Bitcoin. And that's just how it is. And that same 200 is still in there. I just take money out of it. It just goes profit. I just take the profit, leave the same 200 in there. That same, I think I was talking to my boy today. That same 200 it's at like 300 now. But I always just wait till it gets like 400 or 500 and I take it out and just leave the 200 in. And I've been doing that for like 10 years.
Well, that's what you always kind of taught me to do. Just take the profit. I get a text on my phone in the middle of the day. Hey, it's up 5%. You need to grab your profit. And I'm like, thanks, and stuff like that. So that's kind of the right way to do it, right? You think?
I mean, it's definitely one philosophy.
Yeah, I wasn't like, trust me, I'm not doing that thinking like this is the way to do it. Like for me, it was just I just experimented because it was $200, and I like savings. But I would think that if you were going to do it, you probably would want to play for the long play, depending on your situation. You probably don't want to, because of the volatility. Go for something that like you can get it your son, and it might be worth something. You know what I mean? Put a little bit. Because I mean, if we'd have thought about this 10 years ago, 12 years ago, me and my dad was arguing about Bitcoin. I'm like, it's money. It's the same thing. It's not going to replace $1 because you still going to want $1 when you turn your Bitcoin in. Like we kept arguing, it's going to replace $1. No, it's not. We kept having that argument. So, and now looking at it, I want to say Bitcoin was like $16,000 or something. Think about how little money it was, and I'm looking at it now. And I see that 140. What? Like, that's crazy.
Yeah, it is.
And I should have had a coin. I would have just bought one. I'd be straight right now.
Man, I had a buddy of mine. He had 30 coins. He spent it on pizza. Bought a pizza with it. He's like, you know, it was back then when you was like, yeah, I had 30 Bitcoin and bought a pizza with it. I'm like, dude, you know what you would have right now? He said, man, I get sick thinking about it every day. But
okay, B wants to know, in regards to current news, what is driving the value of Bitcoin to drop so dramatically? It's the lowest it's been in like 6 years. Why?
So we talked about manipulation from external. Yeah, very good question. Astute means you're paying attention to what's going on. Again, because Bitcoin is not tied to any particular company or any country, there's not a clear reason for why it's going down currently. What we do know is that individuals were selling. So the price is always dictated by transactions. The price can only be what two parties agree to buy and sell for. So when price is going up, it's just because people are trying to buy it and they're willing to pay more for it. Price goes down when people are trying to sell, and you have to lower the price to sell something. If everyone's at the same price, then no one sells. The competition is by dropping the price to get someone to buy it. So some individuals decided to sell, whether it's hedge funds or whales or large volume cryptocurrency owners. It's hard to tell because the cryptocurrency addresses aren't tracked to a particular name. But somebody did a lot of selling, and that crashed the price. It's not because tariffs were being threatened. It's not because of a bad jobs report or a high inflation number. People intentionally dropped the price, actively selling the cryptocurrency.
yeah, and so can you speak a little more about whales? I was going to bring that up actually,
Sure.
Because they're actually the ones that can actually move the market with crypto. So like, if you think like the traditional stock market, the president can move it with I'm going to increase tariffs. So it drops, or a jobs report comes out, it'll drop, or they have a great jobs report, it'll go up. But it's different with crypto. It's not the same, like you said. It's not going to be a jobs report or tariffs or something the president said. But most of the times, it seems to me, it's those whales that you're speaking of. Would you agree? Or
Definitely in the old days, any movements were whale related.
okay,
A whale is going to have about 10,000 times as many tokens as the average guy.
Mhm.
And as I was saying before, it's the transactions that dictate the price. If I want to sell 10,000 books, I either have to find 10,000 people willing to pay the same price, or I have to drop my price. And when I drop the price, then people are going to be maybe more interested in buying it because the price is lower than it was yesterday and the day before.
right.
So if I want to sell, just like everything else you see, if they want to sell a lot of something, they got to put it on sale.
Mm-hmm.
But when you put it on sale, that's dropping the price. So every time a whale is trying to sell a whole lot of a token, that drops the price.
Okay. No, I love the way you explain things. You have a great way of putting it, like I said, layman's terms and everything like that. So, any more questions? Or?
No, go ahead.
Okay. So where do you see crypto going, here on out? So, I mean, I know I'm still a little bit in the game, I'm kind of doing a wait and see type deal and everything, but like, there's so much going on in the news with, like you said, the Trump side. They're trying to make crypto exchanges where they're buying up coins, and you got all these hedge funds and stuff buying them up. I mean, I know we don't know about a clear 100% of what it's going to be like. But what do you think? What do you see for the future of crypto?
So with the institutional investments in Bitcoin, what I see is Bitcoin stabilizing and losing a lot of its volatility.
Okay.
So the volatility from the old days where we go down to the tens, 50,000, we won't see that. We'll see somewhere between 100 and 150. So we're going to be, bouncing between those numbers for the next few years.
Mm-hmm.
There will be opportunity to make money, but not so much with Bitcoin. With some of the premier altcoins like Solana, like Ethereum, like XRP, we're going to see a little bit more volatility with those prices, but there's going to be a day where the market crashes again.
Right.
We won't be able to predict that day, but I don't think we've seen the bottom of the market just yet.
Okay.
That's going to be the opportunity where if you're holding your cash on the sideline, you're going to want to get in around that time. The next time you see Bitcoin go under 100, that's probably going to be the time you want to cash in. Not cash in, but buy in and be prepared to hold. You were talking before about the long play. Half of the tokens people were talking about 5 years ago aren't even in the game anymore.
Yeah.
So a lot changes in 5 years. So if you're not talking about Bitcoin and Ethereum, you don't really have any guarantees that that token's going to be around in 5 years. So you don't want to invest too much in something that might not be around. Same with startup companies. You know, people like startup companies, but they know they're risky because a lot of them fail, just like restaurants.
Mm-hmm.
You see a new restaurant, that restaurant might not be here in 5 years. Same with cryptocurrency. So that's where the research comes in, to see if there's some visionaries behind the token with a plan, somebody who's going to stand behind it for years to see that plan come to fruition. If you're just buying something because it's got a cute logo and a funny name and a celebrity attached to it, you're going to get FTX'd. You're going to get FTX, so you're not going to be happy about it.
So it's a rug pull, right? Like, so I don't know if you remember the Hawk Tuah girl. You remember that? She put out a coin, and it. So can you explain the rug pull to people?
Sure. So rug pull is old slang as well. It's analogous to when, I can't even remember, it's an old Groucho Marx black and white show where they have somebody stand somewhere and then they pull the rug out from under them. It makes them fall, break their neck or whatever happened back in the old day.
Yeah.
So,
Tom and Jerry.
Yeah.
So it's Groucho Marx. Okay.
So the slang is you set somebody up and you have them expecting something, and you pull the rug out from under them and they fall. And that's what's happened financially. They set you up to think that you're buying something that's going to go up in value. And in the middle of the night, when you're not paying attention, they pull all the money out of it and they crash the token, leaving you holding nothing.
Wow. Was there a country that actually did that? Was it like Argentina? Or I might be wrong. I remember they put out a coin or something.
There's too many. There's
too many
to count. Like I said, that gap between education and opportunity.
Mm-hmm.
If your education isn't meeting the opportunity, that's the space where scammers live.
And it's always going to be there. That space is always going to be there. So that's why you were saying no amount of regulation can really fix that part.
Right.
Okay, so that makes sense. So somebody that's just starting out and wants to just kind of like dip into the crypto market. I know obviously they should do their research first. But do you have any other type of tips maybe to give them for somebody that might be interested in just starting out?
Yeah, beginning investors want to take advantage of what's called dollar cost averaging. Dollar cost averaging is what happens when you buy a little bit each day. So that instead of buying on one particular day at a particular price, you're buying at different prices over different days. And that gives you a lower average price because some days the price is going to be lower than other days. So if you're just starting out, you want to buy just a very little bit every now and then keeping a ledger, keeping track of your buying costs so that you are learning how the price is moving. There's definitely apps for that too, but you want to educate yourself on what's a good price, what's a bad price, and how the price moves over time. The key is the more attention you pay to how much you paid for it, the more you'll be aware of when you decide it's time to sell. So you can hold cryptocurrency as long as you want, but eventually you have to come to a decision. Are you going to sell for profit or are you going to sell for a loss? Because if you never sell, then you haven't really done anything.
Right.
Just like gold, you can have gold, and if you can hold on to it, you can pass it on to your kids because it's gold.
Right.
But it's really hard to pass crypto on to the next generation because of security keys and things like that. So that's a discussion for another day. But you should plan to sell. So just like any other investment, you should plan to sell. You buy it at a particular dollar amount. You should target where you are going to be comfortable taking some profit. and you should layer your profits. So if you want 20% profit, when you hit that, you want to sell 20%. Take some profit. And then if you see a 50% gain, you might want to sell another 20% of your holdings and take that profit. There's always going to be an opportunity to buy back at a lower price. So there's never a rush about it. But when you see profit, it never hurts to take profit.
Okay.
That's kind of how I do it. I try, like when I buy something, I try not to never pay that much for it again. You know what I mean? Like sometimes I do, but usually that's like if I'm paying, like where am I? I was at. I had to get all the way up to $290 because it started going up. Like I was at $234 and it got up to like $3 something. I still bought it, so I was getting it like $290 something. But I bought so much of it, it took my whole thing up to $290. But then I just bought some more, like $230. So I should go back down.
You talking about the average?
Yeah.
Okay.
So it's something I cost out, and that's what I'm saying. Like I don't want to pay more for it than I originally paid. Like I want to constantly be lower than that number. So I have to constantly be under $2.90, or it's not a real good deal. But that's what it's talking about. So as long as you can keep it under there, as long as you're buying under there, whenever it goes up over the $2, you win. Especially if it goes to like $5, that's a double of it.
Yeah, you double your money. You definitely want to take some.
Definitely.
Definitely want to take some profit.
Overnight, with crypto, it's crazy. Like I seen when Ethereum hit 748.
It's funny you brought that up because I jumped out. Remember the last one?
I jumped out early.
I was telling him, like, man, you know what, I'm done. I'm getting out, man. It probably went up another 30%, maybe 40. Yeah. It went up a lot. But it picked up another 20% or something like that. But it went up a lot afterwards. And I was just sitting there, and I kept telling him I don't even want to look at the. I was like, I don't even want to look at the price, man, because I'm just mad.
Nobody sells at the exact peak.
Right.
Nobody buys at the bottom. Nobody sells at the peak.
It's too hard.
So you can't be mad. You're always going to miss.
I know profit. You always tell me that, but
you can only be happy with the profit that you take. You can't be mad about the profit you didn't take.
$1 profit, I'm straight.
No, and that's what you made me feel better about it.
Makes me feel good.
But yeah,
right. As long as I don't lose the game, I'm all good. Erica says, what are some common mistakes to avoid when trying to profit from crypto? I guess that's basically what we're talking about. Selling too early or selling too late.
Well, you don't want to sell for a loss. So that's the first mistake. Yeah. Just because you see it go down, you get scared, you're going to lose all your money. Mm-hmm. As long as you hold your tokens, the day will come. So with keeping in mind that you're buying tokens that have some type of value and purpose, those tokens are going to reach their all-time highs again at some point. Now, buying meme coins, if you bought Trump coin, they've already analyzed the addresses holding Trump coin. 99.7% of the people who bought Trump coin are sitting in a loss position right now. Only 0.3% of Trump coin holders have made any profit. Mm-hmm. So if you're holding a meme coin, you want to pull out, pull out. Nobody's going to fault you for that. But if you're holding Bitcoin, if you bought Bitcoin at 125 and you're scared right now, don't sell. You just need to wait a few months, maybe even a whole year. It's going to hit that number again. You're going to get your money back when you sell. But you don't want to sell for a loss. Don't get scared. The next mistake that people make is they buy on a platform that's charging high fees.
I just got off one because you taught me. You're like, these fees are outrageous. And that's the mistake that I made. And I'm finally off it. But yeah, I'm sorry, I didn't mean to interrupt you.
No worries. So having knowledge of how much you're actually paying to acquire the Bitcoin is important. So you'll be able to keep track of the price you paid, but it may not track the fees that you pay.
Right. Correct.
Yeah.
So you've got to pay 3% fee to buy the crypto because you use a credit card. You have to work that much harder to get that money back when you sell it. So you've got the 3% fee to buy it. You've got another 3% fee when you sell it. That's 6%. Mm-hmm. That means you can't even sell unless you're up 10% to get your own profit. So you have to keep track of your fees. Robinhood's very transparent on the fees, so you can see what the fee is. Coinbase, it's a little bit more difficult because they sort of separate it and they make the fee separate. They don't roll it into the price. So you want to make sure that you're paying attention to the fees. If you're not, you're going to be losing money. So that's the second mistake that people make. The third is buying on platforms that aren't trusted. You can't click on random links that pop up in your window about buy some crypto today. It's not going to work out most of the time. It's going to point you to a fake browser. They're going to have a clone. It's going to be clone-based. It won't be Coinbase. It'll be clone-based. It'll look just like Coinbase, but you'll be putting money in somebody else's pocket right out of your bank. You're not going to like it. So you have to make sure that you're only using the actual app or a password-protected website using two-factor authentication. So you can't just be buying willy-nilly. You want to make sure you're doing it safe. Those are my three tips.
What about Web Bulls? Web Bull good?
Web Bull's cool.
Wait, which one?
Weed Bull.
Yeah, Weed Bull. Some say Weed Bull, some say Web Bull.
Okay.
It's a good platform. I covered it in one of my books. I can't remember. I haven't looked at it recently to know if their fees have gone up or not. But it's a good platform. It's secure as long as you're using the proper website or the app. It's straight.
So basically, what I'm getting is that the crypto market has changed. It's gotten a little bit tougher, but all it really means is that you need to do a little bit more research than you used to have to do in the past. And
just like you would if you were doing any type of stock trading.
Exactly. But my fault. But there's still opportunity, for people that put in the work. Yeah. That's kind of what I'm getting from all this. You know what I mean? That it's not the Wild West anymore. It's not just simple. It's going to take a little bit of work, but if you're willing to put in that work and search out that information, there's opportunity still there.
Definitely. There's still, as I said before, all you do is leave your money in the U.S. bank account. You're not making any profit. So you might as well just go do real estate or buy gold or something. If you want passive income, there's opportunities for that. But if you want some active income, if you like to engage in the process, if you like to keep up on things and pay attention, and if you like the thrill of making significant profit, like if you make 10%, in a few months, you can't do that anymore else.
Right.
You can't buy a house and sell it for 10% profit in a few months. You can't do it. You can't buy a car and sell it for 10% profit.
Lose money.
Right. So if you enjoy engaging in this type of financial warfare, then there's definitely opportunity in the cryptocurrency market.
I gotta admit, it became almost like a hobby to me. It was fun, I'm out right now, but I'm waiting. I'm doing that wait. But when the time comes, I can't wait to jump back in because I probably texted him every day. I'm like, hey man, did you see this is up, or dude, this came out, or something like that, and I missed that, so despite the fact that, there's opportunity in this investment and you can make money, it was kind of like a fun hobby, something to do, man, something to look forward to. Open up the phone, see where it's at, It
is.
It's fun, so I can't wait to get back in there with you.
Yeah, we're waiting, man.
Yeah, we're just waiting, man.
Price is going to fall a little bit more, in my opinion. I think we hit bottom. But, when it continues to fall, it's going to be time to pull the money in and start investing again.
Yeah, I'm ready. What's it called? Crypto winter? You know what they call it? Winter?
Yeah, that's when it's down for a long time. I don't know that we're there yet.
Okay.
Because there's so much more manipulation in the market. Okay. It's really hard to call these bull and bear cycles.
Mm-hmm. You had Donald Trump say something, the whole market.
Yes.
That's what makes me mad, though, man. Because, he don't be real about a lot of stuff. He be not joking, but he be being himself. Do people take it serious and the market start adjusting and moving and stuff? I think that's just scary.
I think he's smarter than you think. I think he does it by design. I think he's making money. Like, hey, check this out.
He knows he can do that.
He's gonna tell you, I'm Trump. This is Trump's friend. Hey, tomorrow I'm gonna say I'm the terrorist on China. Watch the market, okay? And they make money off of that. So they know that's what he can do with the traditional market. But he can't really move that crypto market as much, in my opinion. Would you agree? He does have some sway, but not nearly as much as
He has some sway, but remember, if you're the broker, it doesn't matter if it's going up or down.
True. Right.
So Trump coin, Trump media, Foundation, all these companies that have morphed into crypto trading companies.
They're making money no matter what.
Every time somebody buys or sells Trump coin, they get a transaction fee on it.
So they don't care.
So it didn't matter if Trump coin was profitable or not, or if it had value or not. They get money just from people changing the Trump coin changing hands. So anytime, and now they're into the other tokens.
Mm-hmm.
They make transaction fees on those too.
Mm-hmm.
So they're making near $1 billion just on transaction fees through the Trump crypto companies that his sons are running.
So at this point, it doesn't even matter. They're making money no matter what.
Right. It's the volatility that makes the money. It's not the ups. It's not whether it's up and they're profiting or it's down, they're losing. They're making money every time people make transactions.
Wow.
So it's in their favor to create buzz every now and then to get people moving.
Okay. Wow.
Erica says, as an expert in the field, what platform do you personally prefer for trading and why?
So as I said, Robinhood is a nice platform because there's a lot of fee transparency. And if you're a gold member, they will pay you interest on your uninvested cash. So let's say you have $1,000 in Robinhood and you have it invested in a token. You decide to take some profit. You pull that profit out. Now you're getting 4% on that $1,000, just like it was a money market account or a savings account. So I like Robinhood because of that. So you can make money both ways. You can make money with the crypto, and you can make money on your cash, just holding it there. They used to have a very limited offering of cryptocurrency, but now they've expanded to about 20 different tokens. That's really all I would tell anybody to do. We used to get on the third-party apps like Sushi Swap and different exchanges where you could get access to new tokens when they first came out. That's way more risky now than it ever was, so I don't participate in any of that anymore. I used to still use Crypto.com a little bit, but Crypto.com has really ventured out into the gambling more than I like. They're more interested in futures and predictions market, and they've increased their fees a lot, so I don't like it. Coinbase has always had high fees. It's because it's U.S. based, and they have a lot of fees they have to pay to the government. So I always knew I wasn't really going to mess with Coinbase because they charge a lot of fees. There used to be a platform called Voyager, which was really nice because they pay a lot of money in interest. So if you held and you staked your tokens with them, they would pay you extra interest. But they were over leveraged. They got messed over with the FTX scandals, and they went bankrupt too. So these platforms that you're using, you have to keep an eye on. They can't be too new or too small because they have the risk of going under. Robinhood, I'll say it again, I like it a lot. Everything that you put in there is FDIC insured up to the $250,000 limit. So the money, yes, like a bank. So the money you put in the Robinhood is back just like your bank is, but you're going to make more profit than you will with JP Morgan Chase, Wells Fargo, or Bank of America.
Real quick, when you say FTX, I don't think a lot of people know what you mean. What exactly do you mean by FTX?
So FTX, what was the other name for it?
It's FTX.
They call it Blockfolio, but so
I just tried to know the FTX. I know what you're saying,
Yeah.
but there was another name for it.
they bought Blockfolio. It used to be Blockfolio. So FTX was a somewhat new cryptocurrency exchange that was run by Sam Bankman-Fried. He's a guy that was over leveraging his cryptocurrency, borrowing one pocket to pay bills into the other pocket, and ended up crashing his own company. He had a lot of A-list celebrities on the payroll, like
Brad Pitt, didn't he?
yeah, Brad Pitt was in the commercials. He was one of the founding folks there, as well as was a quarterback guy.
Tom Brady.
Right, Tom Brady was in it.
Yeah, Tom Brady was in it.
So they conned a lot of these celebrities to put millions into it. And they took a lot of money from the average guy. And because they weren't backed by the FDIC, they weren't backed by the U.S. government, when the money was gone, it was gone. and nobody was able to get their money back.
Yeah, so it's crazy. So when he says FTX, that's what he means. Someone gets FTX.
Corey says, what makes Bitcoin such a notable and safe coin in comparison to others?
So real quick, I think it's because it's first. Would you say because it's the first?
Right. It's got the most history, the most
Right.
longevity, and it's got the most market permanence.
Right.
It's ingrained in the market now. It's been around so long, everybody recognizes the name.
That
A
pizza,
lot of
man.
merchants
I
accept
didn't
it.
want that pizza, man. Nuts.
A lot of people, 50 Cent was accepting Bitcoin. So you could buy his albums and music and stream his music, and he was collecting Bitcoin for that.
Really?
So he built up a nice stockpile of Bitcoin by accepting cryptocurrency on his own platform.
And he just held on to it.
Right.
That's cool.
Really?
He never had to buy it. People paid him in Bitcoin.
Yeah.
That's how he was
Then
able
the
to,
Bitcoin goes up.
acquire.
Remember how we were making fun of Odell, the football player that got half his contract paid in Bitcoin? And
Odell Beckham,
If it dropped, remember? And but then now he's up. Like if he still got it right now, he's sweet. And people are making fun of him for that, man. It's just crazy how this is more. But yeah, Jacory, I think it's because it's first. It was the first one. It was the first one out there. I think that's why it's the premier.
And now that it's tied into ETFs and different funds, and there's a lot of old money investors locked into Bitcoin, there's a floor where they're not going to let Bitcoin drop down too much. If it ever did, all the old heads would panic, and then you'd really see some crazy stuff happen.
So you think Bitcoin is too big to fail? It's at that point where it's that too big to fail. Like yeah. Okay. Yeah. Any other questions?
No, man, that seems to be.
Okay. Hey.
I do want you to talk a little bit about. It's like you got other things going on besides Bitcoin. You got urgent care. I mean,
We got 3 locations. Apex Urgent Care.
Yeah, Apex Urgent Care. He's an author. All these books here. He authored all these guys here.
No. I'm not going to say that now. I co-author and I edit and I publish.
Oh,
So
yeah.
I help other people bring their ideas to market. So I like to work with interesting people who have interesting topics that they want to put into a book. I did your book when I was in high school. And, you never know what you're going to learn in school that's going to help you do something else in the future. But all the skills that I learned from your book in high school is the same skills you need to publish, a paperback.
And I mean, you got a variety too. Like you're not just subject. So you kind of, spread yourself around as far as what you're interested in.
Right.
Yeah, it's kind of like what you do with crypto. Make sure you spread yourself around. You don't want to put it on.
Diversify. Diversify.
Nah, man. Yeah.
Political Bear Nation says, why is Peter Schiff, who I follow a lot, seem to be acting like the crypto world is going to die right now? Is he just freaking out for no reason?
Yeah, so I can't say I follow Peter Schiff, but in general, it's always going to go to a person's motivations for why they're doing something. So if somebody's profiting off chaos, then it's in their best interest to sow chaos.
Right.
So if he's looking to profit off that chaos, then he's going to make people scared about it. Cryptocurrency has had bear markets before. You can look at the historical curves over the years, and you'll see lots of falls. And then a few months later, what do you see? You see it rise back up. So there's nothing to really freak out or have a panic attack about just because it's going down. Because just like with the traditional stock market has its bear and bull runs.
Yeah.
The stock market, will have its downs, and then a few months later, it'll be back even higher than it was before.
Yeah.
Well, we'd like to have you back on, in a couple months and talk about, because we down right now. Everybody, You know, crypto world is down right now. Maybe we have something different to talk about.
It was funny because I was telling Charles, it was like 2 days before you got your call from your person, and you know we were talking about it. I said, no, I really think it's going to go down, and I think the next day I text you. I look at the market, man.
It's trying to get that, man. It's way lower than it was when you called me.
Yeah, and so it was definitely getting interesting out there, man. I really appreciate you coming on, man.
This is fun, man. I love to be back. We definitely talk about this, talk about other things too, man. It's like you said, I do write about a lot of different things.
Mm-hmm.
I've written about financial freedom, financial independence, because and the crypto ties into it because if you truly want to be free, you need to be financially independent. That's the only way to carve your own path and be your own boss and not have to, live your life according to somebody else's rules.
That's a mindset, and that'd be someday be a good time to maybe have you on and discuss, the type of mindset that allows you to be the person and to be successful as you are today. Because honestly, man, proud of you, proud to have you as a friend and somebody that I can, confidant, somebody I can talk to, and
you're a good friend, man.
I appreciate all that you do.
I ain't gonna lie, I just like seeing black dudes do it. My people be disappointed me the shit out of me sometimes. So when I see black people do good, man,
You get up, but I told you.
Proud.
I asked somebody. He's like, who? I told him about you, and this man lit up. I'll never see him light up, man. He always drunk.
Shout out to my brothers, letting me down. But Erica says great insights. Are you on Twitter or any other platform where you post about crypto? I'd like to follow.
No. I'm on Instagram, but I don't do a lot of posting. I'm going to keep it real. I run these clinics. I do emergency medicine on the side. I consult with lawyers as an expert witness for legal cases. And I got 3 books on the way that's coming out by the end of the year. So I don't do a lot of posting. But definitely, I'm going to connect with these guys. I'm with these guys, put my words out there. I like bringing things to market. I like making things. So I don't do a lot of the social media stuff.
There you have it. We out here, folks.
Thank you for joining.
Thanks for having me, guys.
Appreciate you.